What's up everyone, my name is Coleman, and today, in this video, I'm going to be talking about a $100 billion blue chip company that is disliked by many investors, and that is Micron Technology, ticker symbol MU. Although Micron is an industry-leading company, this is a stock that has historically not been easy for shareholders to hold, which is why in this video I want to break down and analyze this company. First, I'll go over the company, their history, I'll break down their business and talk about their products. Next, I'll take a look at their financials and valuation. Third, I'll give the bullish thesis with this company. And finally, we'll take a look at the risks with Micron, my thoughts, and what I'm doing with this investment. If you like this video and find it helpful at any time, hit the like button since it really helps out the channel, and let's get right into it. So what is Micron Technology? They're ranked as the world's 4th largest semiconductor company and have a market cap of $94 billion. Micron designs, manufactures, and sells memory semiconductor chips worldwide. They make memory chips that allow a computing system to store information either temporarily or long term. That's not the path they started on though. Instead, Micron was founded in 1978 as a semiconductor design consulting company. Shortly after, they assigned some engineers to develop smaller and faster DRAM. A few years later, in 1981, Micron opened a fabrication plant and started manufacturing these 64K DRAM chips. This ended up being very successful, and in just 1 year, the company supplied around 1 million chips. Then, in 1982, Micron achieved a technological breakthrough, and their new chip was roughly half the size of Japan's leading companies and a third smaller than Texas Instruments chips. They were rewarded by this, and in 1984, the company went public, just 6 years after its inception. Later that year, they developed the world's smallest 264K DRAM chip. Innovation continued, although the next 15 years were very volatile for the company. In those 15 years, Micron's earnings fluctuated in a massive way. In a couple of those years, they made over $100 million a year, but in other years, they lost millions of dollars. In fact, in 1998, they lost over $233 million. Because of this, they were in financial trouble. Despite being in financial trouble, Micron expanded its operations in late 1998 with the acquisition of Texas Instruments' memory division. Their CEO believed this would help position Micron as one of the world's largest DRAM producers. He was right, and for more than a decade, Micron has been the world's 3rd largest producer of DRAM, and they now have 23% market share, behind Samsung and SK Hynix. Currently, DRAM makes up 71% of their revenue, and NAND makes up 26% of their revenue, although the majority of their profits come from the DRAM business. The company no longer discloses its gross margins by product type, but in 2018, the company reported DRAM gross margin was 71%, while NAND gross margin was 48%. So DRAM is the more profitable business for them. I should also mention they had another product they were working on too, called 3D XPoint, but they just scrapped that project in March and are exiting the business entirely. They said this will save them $400 million a year, plus they will get a significant amount of cash from selling the fabrication facility. This will also help them focus on developing other promising memory products. So what exactly are Micron's products and what do they do? Well, at a high level, there are 2 types of semiconductor chips that are commonly produced. There are memory chips and there are logic chips. As I mentioned earlier, Micron makes memory chips. These are different than logic chips, which are the traditionally thought of semiconductor chips. Logic chips have the job of processing data, and they work as the brains of an electronic device. Memory chips don't process the data. Instead, their job is to feed the data into the processing chips. What's unique about the memory chip industry is that with memory chips, production is vertically integrated. The same companies that design the chips also make the chips. This is different than logic chips, where most companies create their own designs, but outsource their production to Taiwan Semiconductor. The most common types of memory chips are DRAM and NAND. DRAM, also known as Dynamic Random Access Memory, is a type of memory that stores each bit of data in a memory cell. Think of it as the short-term memory for your computer. It stores memory when the device is on, but when you power it off, the memory goes away. This is why if you forget to save your work before powering off the computer, you'll lose the data. NAND, which stands for not and, is the most common type of flash memory. Think of it as long-term data storage. NAND retains the stored data even when the power is turned off. It's used in storage devices like SSDs, USB drives, and SD cards. Between these 2 products, Micron is able to reach a variety of markets. PCs, gaming consoles, data centers, and mobile devices all use these products. They're also continuing to position themselves in the automotive and AI markets, which are set to grow as these industries become more reliant on computing. Currently, Micron sells these products through their 4 business units. Compute and networking is their largest unit and sells products into the cloud server, enterprise, graphics, and networking markets. This unit made up about 42% of their revenue in the second quarter of 2021. Mobile is their next largest unit and sells products to the mobile device and smartphone market. This unit generated about 29% of their revenue. Embedded moved up to their 3rd largest unit, where they sell products in the automotive, consumer, and industrial industries. This unit makes up about 15% of their revenue. Their smallest unit is storage, which sells products to cloud, client, enterprise, and other storage markets. This unit made up about 13.5% of their revenue. So they sell products in many industries that are growing as storage and data are becoming more desired. So now that we know a little bit about the company, what do their financials look like? Well, they've historically operated in a cyclical industry. This means that from year to year, their financials can be inconsistent depending on supply and demand. Since 2004, revenue increased by 50+% a year during 4 of the years, and it declined by over 17% a year in 3 of the years. In 2018, revenue peaked at $30 billion, but it fell to about $21 billion last year as a correction in the memory industry happened. Analysts expect revenue to increase 27% this year and 31% next year, which is very impressive. Moving down the income statement, you'll also see that gross margins have fluctuated over the years between -9% up to 59%, depending on the year. In 2019, margins were nearly 60%, but last year they fell to 30%. This is because they operate in an industry that has historically been driven by supply and demand. Suppliers try to capture more market share by increasing their investments and lowering their prices. This creates supply and demand imbalances, which makes margins and profitability very inconsistent from year to year. When moving to the balance sheet, starting at the top, you'll see that they have about $6.5 billion in cash and $7.2 billion of total debt, which is okay. They also have $17.2 billion in current assets compared to $5.4 billion in current liabilities, putting their current ratio, which measures whether a company can pay its short-term obligations, at about 3.2, which is very strong. When we jump over to their free cash flow, in 2018, it exploded to about $8.5 billion. That number tumbled all the way down to $83 million last year as margins were compressed by the memory correction. Margins are expected to increase to 38% this year and 49% next year though. So analysts expect this free cash flow to bounce back to $3.3 billion this year in 2021 and $8.1 billion in 2022. With all of these numbers expected to bounce back, this is not an indicator that we're heading towards another memory correction. Another metric I like to look at to view the quality of a business is the ROIC, or return on invested capital. This basically measures how well a business is using its capital to generate profits. Since 2013, ROIC has been positive every year, and in 5 out of the 8 years, it's been above 14%, which is very good. This means that Micron has historically invested their capital well. Even with these financials, they trade at a forward PE of 8, which is extremely low in this market. The PEG ratio, or price to earnings growth ratio, which takes into account their projected growth, is 0.38, which is excellent. For comparison, a company like AMD has a PEG ratio of 1.23, and the lower the number, the better. I do want to say though that with these types of cyclical businesses, it's probably not best to value them based on PE ratios, since their numbers can fluctuate so quickly based on market cycles. Instead, when looking at these types of companies and industries, it's very important to know where they're at in the business cycle, because that's what's going to dictate their future performance. Either way though, they trade at a good valuation and their financial position looks pretty strong. So what is my bullish thesis with this company? Well, there are 4 things I want to touch on. First, I want to talk about their CEO. They're led by Sanjay Mehrotra, who is their CEO and president. He joined Micron in 2017 after his 27-year career at SanDisk, where he was the co-founder and then served as the president and CEO for over 5 years. SanDisk was one of the leading memory and storage companies before they were acquired by Western Digital in 2016. So they have a CEO who is very experienced in this industry, plus he has a decade of leadership experience as a CEO. Next, I like the fact that many big-name investors own this company. Li Lu, who manages some of Charlie Munger's money, owns Micron and it makes up 24% of his portfolio. Monish Pabrai also owns Micron and it makes up 28.5% of his portfolio. Other notable investors like Guy Spear, David Tepper, Seth Klarman, and Prem Watsa also own stakes in this company. So it's a company that has some notable investors that own this stock. Although many of them bought back in 2019 and 20 when the stock price was lower, it's still nice to see that it's a company that they like enough to invest money into. I also like that this is now a consolidated industry. In 1995, the top 10 DRAM players accounted for about 80% of the market share. That's changed, and over the past 10 years, DRAM has significantly consolidated. Today, there are only 3 main companies remaining. Samsung, Micron, and SK Hynix hold over 90% of the market share. Historically, these companies have invested a lot of capital into design and manufacturing. This hurt pricing and profitability, which eventually removed the competition. As a result, there are only 3 companies left. Although the industry is still very competitive, these companies have behaved much more rationally since the industry was consolidated. Because they no longer have to focus on market share, they're able to focus more on profitability. I believe this could even be playing out in their numbers. Even at the bottom of the most recent memory cycles, gross margins stayed much higher than at the bottom of previous cycles. Before the DRAM industry became very consolidated in 2013, it was common for Micron's margins to drop below 12% and even go negative at the bottom of these cycles. After the consolidation, their margins haven't dropped below 20%, even at the bottom of these memory cycles. So going forward, DRAM could become a good margin industry, and the inconsistency with earnings and margins may be starting to stabilize. Finally, the supply and demand looks like it's in a good position right now. Demand is very strong, and a lot of that has been driven by growth in their end markets. Markets like data centers, PCs, and 5G are all growing, and they're expected to continue to grow. Artificial intelligence is also going to play a larger role in the future, and the way AI works is that it requires massive amounts of data. This creates a lot of demand for chips that can process all of this data. So demand looks strong, but on the supply side, investors are worried that the market is oversaturated and there's too much supply, which is causing concerns. After talking with Micron's CFO, 5-star analyst Aaron Rakers thinks that these concerns are overblown. He thinks there appears to be a sustainable DRAM upcycle through 2021. Additionally, Micron believes there will continue to be sharp shortages in the DRAM industry through 2021. Micron's financials would also point to this trend, as their inventory has been declining since September of last year. So in addition to strong demand, supply seems to be in check, which would put them in a favorable operating environment. So what are the risks with Micron? My thoughts, and what am I doing with this investment? To me, the largest risk I see is that the industry could face new entrants. Although it's a capital-intensive industry and difficult for new entrants, there have been some recent concerns that there could be competition coming from China. One firm has already started mass-producing chips, and if successful, it could help China become self-reliant on making their semiconductor chips. Increased competition in the industry would likely force other chip companies to lower prices, which would lead to lower profits. This is because Micron sells commodity products. There is very little to no branding involved with their products, and most people don't know if the memory in their phone or computer is made by Micron or another company. Because of this, they have very little pricing power, so if new entrants emerged, margins could wildly fluctuate again like they did before the industry became consolidated. It remains to be seen what impact this new Chinese company will have on the industry, but this competition is a risk to be aware of. The other risk I see is that the timing could be off and it's the wrong time to get in on this memory cycle. As I've mentioned, the memory industry has historically been cyclical, and if that continues, there's a risk that the timing of this investment could be wrong. Although I've already shared that the supply and demand seems to be in a good position, some people are still concerned that supply could accelerate, which would lower margins and profitability. Given that the stock is trading near its 5-year high, getting in at the wrong time could result in some short-term losses. So what am I doing with this investment? Well, for me, I personally believe that the supply and demand is good in the memory industry, plus I do like that the industry is now consolidated. So I just opened up a position in Micron because I think it has the potential to be a good opportunity. It's not too large of a position right now, and it makes up between 1 to 2% of my portfolio. But I'm going to be carefully watching the company and the industry, and I could add more if my thesis around Micron looks good and the price continues to fall. Either way, hopefully you found this video helpful. I know if I were to touch on every aspect of Micron, it'd be an hour-plus long video, but hopefully I was able to cover the main points and help simplify this company. If you liked the video, don't forget to hit the like button, and if you want to see more videos like this one, please subscribe and hit the notification bell. Thank you so much for watching, and and I'll see you in the next one.